that's why I decided to make the jump. And I know that, quitting your job and giving up your career in the middle of a crisis or a pandemic sounds risky, but I think that not having tried is probably even riskier. So.
Welcome to the InvestNest Real Estate Investing Show, a community for real estate investors to learn, network, and grow. Be sure to join the investnest.com and start learning and earning today.
Hello, everyone, and welcome to the InvestNest Real Estate Investing Show, podcast number 19. I'm your host, Travis Murphy, and I want to thank you all for joining us today. We've got another great Invest guest lined up, and I'm going to introduce him in just a minute. Before I do, I want to remind everyone to hit the subscribe button if you're listening to the podcast. Check us out on Instagram, Facebook, and Twitter at The InvestNest. And be sure to check out theinvestnest.com. Create your free profile if you haven't done so already, and check out our blogs and articles and start networking. All right, and now let's welcome our guest to the show, Juan Carlos Bujeda. He is an investor who is currently working on some projects in Spain, as I understand. That's but correct. I'm gonna let him tell us a little bit more about that. So Juan, welcome to the show. How you doing today?
I'm pretty good, thanks. Thanks, Travis, for having me. It's a pleasure. I think my profile and my background is somewhat different from the other people we had on your podcast. I do come from the U.S. Actually, I studied in the U.S. and in New York. I have an engineering background. I used to work as a construction engineer in New York way back when. Seems like a lifetime ago. And after a few years in engineering, I decided to jump into real estate. I wanted to combine my double interest in construction and finance. So real estate seemed like an obvious choice back then. Awesome. That was around 2004. So I decided to join New York University's Master's in Real Estate Finance and pursue a career in real estate. So awesome. I started out working at Ekman Ziff as an intern for a few months. I was there as a mortgage broker. That was my first. This was like that in 2003, about 2003. So after a 15-year trajectory in real estate finance, working at the institutional level, I decided that it was time for me to branch out on my own and start doing my own deals.
I think you have a pretty cool project that you closed on something yesterday, right?
Yesterday, yes.
Well, congratulations! I forgot to tell you. That's awesome. Everything go well with the closing?
Everything went well.
Good.
Right now, I'm a real estate developer. I am now focused right now on projects in Valencia, in Spain.
Okay.
Valencia is a city in the Mediterranean coast of Spain. It's south of Barcelona, and actually has a pretty large expat community here. And it's a city that it's currently growing in terms of its needs of its floating population is continually growing. Has some really good universities and it's attracting a greater number of students from abroad. So basically, my objective as a developer is really to capture that market, which is currently underserved, by acquiring plots and creating units for either people that are coming here to study master's degrees or bachelor's degrees, or just here temporarily on like research projects. So there is a lack of service apartments or multifamily apartments in the city right now. So
is that like student housing?
Mm-hmm.
Is that what you're talking? Okay. And you're doing the developing on the deal.
Exactly.
So you're buying raw land and you guys are doing the construction. So that makes sense with your background in starting in the construction finance and then now fast forward to real estate and developing, which is awesome. Right. So Spain, how did you end up Spain, or why Spain? Is it that you recognize the demand there?
Well, I'm half Spaniard. I was born in New York, raised for the most part in New York, but I also spent a significant amount of time here in Spain. My wife is from Spain as well, from Valencia. So we always decided we always wanted to come back. Spain has a great lifestyle. The weather's great, the culture is great. It's laid back, and we just after living in New York for 18 years and for another 8 years in Madrid, which is the capital of Spain, as you know. Pretty hectic lifestyle. So we decided to come to Valencia and do something different, chill out a little bit, be more in control of our time, and apply my real estate skills and just work on my own, basically. Mm-hmm.
Absolutely. Yeah. Live the life you want to live. Right. I mean,
Yeah.
I can relate to that. I live just outside of DC, so it's not very slow paced around here either.
Mm-hmm.
So tell me about developing, like how does that process work? Like, what does that look like from start to finish? You don't have to go into super granular detail, but just kind of high level. Can you talk us through what a project like that entails, and I guess where in that process you are right now?
Sure. Well, basically, the development in Spain is somewhat different from what it is in the U.S. Here, the zoning laws are like super strict. So basically, you have laws at the state level, at the federal level, if you will. You have laws at the state level, and then laws at the local level, right? So they overlap, and the overlap of these really define exactly what you're able to build. And there's really no way for you to modify or change the project in any shape or form, because it's every project is very specifically defined by the local laws to what exactly you can build. So there's no planning approval. I mean, there's a land and time process, but that takes many years and it's complicated. So I think that's the first major difference with the U.S. There's a lot less initiative on the part of the developer when it comes to land entitlement. A lot less creativity, if you will. Then another major difference is the depth of the financial markets here in Spain. In the U.S., banks treat real estate as a business, and you have many different banks and many different lenders that actually participate in the market. You have hard money lenders, you have lenders that focus strictly on construction, you have investment banks, you have all kinds of lenders that across the capital stack that you can tap into. Here, it's not so deep, and one of the major differences that we've seen in the past 5 years is the emergence of these different players in Spain. So now we have the traditional banks that fund real estate to sell. If you want to sell the individual units, that's where traditional Spanish banks participate. And then you have alternative lenders that will lend you at low double digits to do other projects, especially in terms of bridge financing for deals. So I would say that in terms of zoning is very different. The depth of the capital markets are very different, which forces you to do a lot of deals with full equity. So that's another major difference.
So you're more or less raising capital for these type of deals, unless it's like, I guess, what we would call conventional financing for a residential dwelling or something like that. That's straightforward. If you're going outside of the box or doing something a little more creative, or I guess with a higher level of risk, there's not really institutional lending there that would serve that purpose. So more or less your option is to raise capital. Is that am I hearing that correctly?
Exactly. Yeah, you just hit it on the nail. So I think that if there's anything that I've learned in the past 15 years is really to make deals. I consider myself more as a deal maker, whereas my partner, if you can see that in my Instagram account, yesterday to celebrate that or closing, I uploaded a picture of my partner and I at the notary signing on the deal. He has more of a construction and development background, so I'm more of the financial guy, the deal making guy. Okay. So I think we complement each other very well.
I mean, I have to imagine a deal like that, as far as the financing goes, has to be somewhat complex, and you have to be thorough on every deal. But you're talking about not just I think a lot of times when people think about real estate investing and either repositioning a property or repurposing a property, they're taking something that's maybe has some deferred maintenance and the rents are suppressed, and they're going in with the vision of fixing the property up, raising the rents. And in something like that, you're going for like a forced appreciation play. Your numbers have to be thorough, but you're going from a blank canvas of land, with multiple phases of development. And there's a lot that you guys have to deliver on, from what you are telling your investors or your partners. that it's not as simple as, yeah, the rents in the area should be this and they're only that. So we're going to dress the landscaping up, raise the rents, and then we're going to have a higher net operating income and sell the property for this much more in 5 years. You're going completely not completely off vision, but you guys have a vision and a plan that has to be executed on. So when you're doing the financial modeling behind that, you have to be able to really foresee what that outcome is going to be with whatever product you guys have on market. As far as like a risk standpoint, obviously there's more risk associated with that, but are the rewards going to come because of that as well? I mean, if this isn't something that's very easy to do for people, obviously you need a lot of experience in specific fields, but are the returns going to be, I would imagine you're going to have some pretty good return projections for yourselves and for your capital partners, right?
Yeah, I mean, it's a project that it's generally risky if you're not familiar with the process.
Okay.
One of the milestones we have to hit on this project before we actually go out and start raising capital is undergoing the archaeological intervention on the land, because this is a former site that where there used to be a hospital in the Middle Ages, and there's the local laws require you to make sure that all excavations are done in conformance with that there's an archaeological study that
right.
to make sure that none of the remains are thrown away. That's our first major hurdle. So we managed to buy this property at a big discount to market, and our returns are after tax for us, which we have bought the land with our own equity. They're approaching about 3x. So, which is not bad for a development project here in Spain.
Yeah, I mean, yeah, for sure. But your factor, you guys still have to do the whole the construction. So you're going through the development process right now. You closed on the land, right? And then now you're going to start to begin to build.
Well, we have to go through the excavation and the archaeological study. So once that's done, then we have to build out the foundations. And when that's ready, then obviously we'll be able to continue the construction work. But all that is in the context of a construction license that we need to get from the municipality. So that's another milestone that we have to hit, and another potential risk. So our idea is, from a financial perspective, the way we want to structure this is for us to acquire the land, which we already did, undergo the archaeological study, the excavation, the foundations, and to obtain the final construction license. And when all those risks have been taken care of, then we're going to go out to the market and raise capital, obviously charging a premium on our equity. So.
Got you. Okay. So right now, is it just you and your partner that's going to take it to that point? Okay. So you guys are pretty much self-funding?
For now, yeah.
Yeah. Okay. All right. So this is cool. I mean, I know I'm probably jumping around with the conversation. It's just because I'm so interested about it. This is a interesting topic. How did you have the vision to pull all this together? This is a multifaceted project with many layers, and it sounds like between you and your partner, you guys have expertise in certain fields. How do you go? What were you doing before this, I guess, and then how did you go from that to this, or were you doing other projects like this before this one?
Right. Well, I've always done these same kind of projects, but at a more institutional level.
Okay.
My former employer, which is an operating partner for institutional investors, we did the exact same thing, but for student housing.
Okay.
Throughout Spain, and we put together a portfolio of more than 3,000 rooms in Spain and in Portugal. So, but it was more. My role was more focused exclusively on the investment part, dealing with banks and dealing with investors. Whereas my colleagues, they either dealt with the technical aspects of the deal or the administrative part of the deal. So right now, obviously, my role, I'm self-employed right now, right? So I have to. A jack of all trades, and I was living in Madrid back then. So I moved to Valencia about 3 or 4 months ago. And my partner, and he's I've been a friend for a very long time. We've always been talking about doing stuff together. So when he knew that I was moving to Valencia, he was like, "Hey, dude, we gotta check out this pod. Come with me." And when he told me what the acquisition price was, I was like, "We gotta jump on this one."
Yeah,
it's really good. So
yeah, that's cool. That's awesome. So you have experience in this, more or less behind the scenes, I guess it sounds like, for your previous position. And so you kind of know how all of this works, and you're very familiar with the process. Obviously, you and your buddy and your partner decided to go out and just take this one on yourselves, right?
Exactly.
Okay.
Exactly.
Okay.
It was big enough to make it worthwhile, but it was small enough that we could tackle it on our own, at least at this stage. If we were to fund the construction totally out of pocket without any financing, that would be somewhat of a challenge. But I think that for now, we were in a pretty comfortable position because we own the land outright. We don't have any debt on it, so we can, if the excavation turns out to take more than a year, it's fine. We're not. I mean, obviously it hurts our returns, but we don't. Nobody can foreclose on our property, so that's a pretty comfortable position to be in.
Yeah, absolutely. That's awesome. And so how many, do you have what's the number of units you guys will have when you're done?
Oh, it's a small building. It's 6 units.
6 units. Okay. And are you guys, once it's all complete, do you plan to hold it and just keep it for your own investment with you and your partners, or what's the longer term play?
Our long-term play is really to max out on our capital appreciation. It's more of a capital appreciation strategy rather than income producing. So our idea is to max out on our returns and rotate the capital, also taking into consideration the point in the markets in which we're in, right? So I think we are in a pretty good position right now because we're probably heading into a downturn in the market. So by the time that we secure all the final permits and we get financing and the project is built and stabilized, we'll probably be at another point in the cycle, probably in the recovery point. So I think that will be the optimal time to sell and probably cash out and maybe invest in another project before everything starts getting too crazy in terms of pricing. So our goal is to really reinvest all of our profits and well, if we 2x our investments, obviously, or a 20-year period, your capital appreciation is substantial.
Yeah, so there's a lot in that, and I'm going to try to kind of, I think, explain what Juan Carlos is talking about, and you correct me if I'm wrong, but when he's talking about capital appreciation play, him and his partner are putting their money into this. So there's a valuation almost as far as what this project is worth. Their plan is to take it to a certain point and then open it up to outside investors, but at a much higher valuation than what their amount of money they put in. So instead of financing the remainder of the project with debt, like you typically would from a loan of a bank, they're bringing in equity partners from other people who, instead of giving them the money as a loan, they're buying equity, but at a higher valuation than what the amount of money they put in was. So in theory, or in a sense, you and your partner are going to kind of cash in at that point first. Then I don't know how much equity you're giving away, just call it, to say 50%. You still retain your 50% or whatever amount that you own. And at that point, I don't know if you'll have all your money or that's when you're going to realize your 2x or not. But either way, you're going to get money. You guys are going to cash in and get money back. That's not only going to finance the deal, but recover your own returns. And then you guys are probably in it, I would guess, for almost nothing or nothing, and then enjoy the returns over the remainder of the project. And then at that point, once it's done, determine if you want to sell the property or cash in or what have you.
Right. Yeah. There's obviously any investor that looks at this project and maybe 1 year from now, we'll have all the permits in place. We'll have the foundations in place. We'll have a bid from a contractor, which really minimizes the construction risk. So basically, we have all our T's crossed and our I's dotted, and obviously the return that he's going to get or she's going to get on the investment will be a lot lower than what we're getting. So that enables us to capture that premium in this 1 year period. So it's more of a financial play, really.
Yeah, no, that's fascinating. Like how, I guess if there's people out there that are listening to this and curious, about doing these types of projects, where would you tell them to start? I mean, I know this is somewhat of a unique situation. I think you're probably our first international guest I've honestly had on the podcast. So most of our listeners, I believe, are U.S. based still at this point. Hopefully, we're opening that audience up. But to the listeners that may be interested in getting into more about this, because I think a lot of the podcasts and books that we read are more in a traditional real estate investing sense. Do you have somewhere you could point people, or any advice you could give people, or recommendations on learning this stuff? I guess obviously going to school for a lot of the finance stuff would make sense, but do you have any pointers for people that want to learn more about this type of development projects?
Right. Well, I think that the a good understanding of corporate finance or real estate finance is it really goes a long way. I mean, real estate, private equity, which is basically from where all these ideas come from, is basically just based on the principles of what an internal rate of return is, or a net present value is. Basically, it really all comes down to that. But I think a good understanding of corporate finance or real estate finance really goes a long way. And really, it doesn't really take much more than that. I think that talking to investors that are familiar with these terms helps a lot. I think that if you're honest and so familiar with these terms, and you approach an investor and say, hey, I'd like to do this deal with you. What do you think? I think this is a fair return in the market. And I think having these conversations with investors, which are at the beginning not really binding, I think really goes a long way. Real estate is a people business, and the industry is built on the knowledge of people. So I think that having lots of conversations with many different parties is key. Mm-hmm. It really goes a long way towards learning.
Awesome. What you just said there, the internal rate of return, net present value. I think if people are out there listening and you want to start learning more about what Juan Carlos is doing, and you're only more or less working in the residential realm of like 1 to 4 units, you may not pay as much attention to those, those analytics or measurements, what have you. But if you start to learn more about like more of the commercial real estate, multifamily apartment buildings, and you do the financial modeling behind it, net present value and IRR are the metrics that people use when they're evaluating those types of deals to determine if it's a good enough return for them to park their money into it. So I think if you're curious about what Juan Carlos is doing, I would say start trying to educate yourself and learn a little bit more about more commercial real estate finance, like what you've been saying, and how to analyze multifamily deals. Probably there's lots of books out there, obviously, about multifamily investing, and I think some of those metrics and analytics that come from those types of books would get you a good grasp on what it is that you're doing. I would say. But to be honest with you, I'm sorry, go ahead.
I'll interrupt. I think another interesting way to look at these deals is if you separate the investment part from the actual management or asset management of the deal is. So for example, the arrangement that I have with my partner is that, I put in most of the equity into the deal. So I get a preferred return on the investment, right? That means that, up to a certain rate, you can think of it as a loan to the LLC, basically, so that really accumulates a certain interest rate, right? So the loan accumulates a rate. So I don't get paid an interest on a monthly basis or annual or what have you. I only get paid from the profits of the project, right? So that's why it's preferred equity. It's not really debt, but it does accumulate interest as if it were a loan, right? So once the project starts producing cash flow, the loan, the preferred equity, right, gets paid back, and once the project is sold, it should be enough to pay back that preferred equity totally. Mm-hmm. And then the profits get split in 50-50 between the investors and the managers. And I'm a manager as well, so
right.
As well as he. So here we have to separate the investment returns from the actual sponsor / management returns. Gotcha. So I think understanding those concepts, which is also imported from the private equity world, I think also helps. because it really helps you clarify, and separate exactly, how much the investor is entitled to and how much the sponsor is entitled to.
Yeah. So it's like, I guess what somebody would compare to like a syndication, a real estate syndication, and the preferred return, I guess, really, if I can see if I'm understanding you correctly, it's like, you're pretty much making sure that the money comes back to you first before the other returns are then distributed to the other equity partners, either on the member side or the limited partner side or the member side. But you're kind of like front in line, so the preferred return comes off the top first, almost as if it was like a business expense, but it's really not. It's your return. You're making sure you're getting your return on your investment first until I guess you get your capital back, and then it's split up however you guys have the rest of it split up.
Exactly.
Okay.
Exactly. That's how it works. And the advantage of being in the preferred return position is that, as you mentioned, you have like a cushion, right? So let's say the return of the project is, my preferred rate is X, and the return of the project is exactly X. Well, I get paid back my preferred return, and the sponsor gets zero, right? So I have that cushion. The sponsor's equity in the deal acts as my cushion, so I'll always get paid first.
Right. Okay. Hence the preferred.
Exactly.
So, I mean, this is all. It sounds really, maybe sounds real complicated to people, but it's really not. If you're interested about this stuff, like we said, research real estate syndications, multifamily syndications. I think it's basically about how you can put deals together. It's really creative financing is one way to put it, really. But outside of all of that and those complexities, really what you're doing though, it's the same as what I think a lot of people can relate to, even if it's, wanting to do a flip, or they want to do a BRRRR, or they want to buy a duplex. It's about people, it's about partnerships, right? You and your buddy said, let's do this. You took action. You had confidence that you could do it. You had your regular day job and your career that I imagine you're grinding out like we all do. And you wanted more, and you and your buddy, combined forces, you partnered up and you took action, and here you are out there doing it, right? And so I think a lot of people, whereas maybe the financial aspects of what you're doing may be lost a little bit or over our head. I know some of it's over my head, but those fundamentals from real estate, I think we can all relate. From all of us every individual out there that wants to get more out of life, whether it's financial freedom or living in the areas that you want to live in, and living, your best life or the life you want to live. It's about taking action and partnerships with other people and making it happen, I think. So, you're a complete testament to that. But, I guess, what was it that made you decide to take action? And had you been thinking about doing something? I guess you mentioned you had been thinking about doing something like this for a while. What was it that finally spurred you to say, I'm going for it?
My motivation really was to be in control of my life and the direction in which I wanted to take my business. And basically, at some point, I just decided that I was done with being told what to do. I really just wanted to be out there on my own. It's maybe something genetic. My dad started his own business when he was exactly my age in New York. Exactly my age. So it probably has something with, hitting that, the fact that I'm 40 now. And this is an idea that was hovering around my head for a very long time, until I really decided, I think it's worthwhile the risk. I have plenty of experience. I have contacts. You can always have more experience, more contacts, more capital, but you're not going to get that time back, right? So I think that time is of the essence, right? Like people say. Like lawyers like to say. So that's why I decided to make the jump. And I know that, quitting your job and giving up your career in the middle of a crisis or a pandemic sounds risky, but I think that not having tried is probably even riskier. So
yeah,
and I think we're taking a balanced approach to it. I think I'm doing deals that are relatively small for now, and are within my means. Not taking an extraordinary amount of risk. I didn't put any leverage on this project, so we're taking things one step at a time. But I'm in pursuing something that I've been after for a very, very long time.
Yeah, well said. I mean, I think, whether it's hereditary or what or not, I think there is something in certain people. It's just that, that entrepreneur inside of us. I guess not everybody has it, but a lot of people that are probably listening to this podcast and podcasts like this, most likely have that same feeling or that same urge that I think you're describing. But like you said, you could always have more capital, you could always have more this or that, but it's never going to be perfect, right? Yeah. Sooner or later, you can be as prepared as you're going to be, as you're going to be. Sooner or later, you got to take action, you got to do it, and you got to make it happen. And it's never going to be perfect, but once it's done, you did it, and now you can move on and hopefully do it again. But you can't do the next one unless you do the first one, right?
Exactly. Starting is always the most important. And while I'm not doing deals, my objective is which is basically how we came into contact, is basically to create an online school for real estate finance. So when I started out, I had to spend a good amount of money on my education to learn all these concepts, and I think that with online learning, it's much more education is much more accessible to everybody. So our objective with this platform that we're building is really to make real estate finance more accessible, and sort of like create a community for people that want to learn this terminology and this way of thinking that's more imported from the private equity world, for the entrepreneurial real estate investor to learn all these concepts without paying a fortune in master's degrees. And I think all this stuff is important because, and I know it sounds technical and complicated, but it really is not. It's based on basically just the basic principles that I mentioned, right? Present value and internal rate of return. I think learning these things is very useful because, as I mentioned, right, real estate is a people business, and when you are familiar with this terminology, it really allows you to structure deals in a way that people are compensated in relation to their risk tolerance, right? So if you are a conservative investor, and you obviously going to expect a lower return, so maybe you can offer a preferred equity participation to that person, or maybe you can structure it as debt, right, and give that person an even lower return. Or if there's someone that has a higher risk tolerance, maybe you can do a mezzanine tranche, or they can participate as a sponsor in a deal if they are like really comfortable with undertaking risks and they have the experience, right, in managing real estate projects. So I think learning having all this knowledge does not only prepare you to work at an investment bank, if you will one day, but I think that at our level, at the small is estate entrepreneur level, it really helps because it really makes you a better deal maker. So
yeah, absolutely. Education is key. I always, I try to preach that you definitely need to know what it is you're talking about, in anything you're doing with life. But when it comes to this stuff, for sure. So I guess tell everybody if they're interested in connecting with you or learning more about you or more about what it is your educational platform that you're promoting. How can people connect with you?
I think right now the easiest way is through Instagram. My account is Real Property Investing altogether, and I'm creating content. I'm right now I'm during my free time I'm building a course on principles of real estate investing, where I'm going to try and cover the whole process of how a professional real estate investor underwrites a deal. But that's in the works right now. So in the meantime, I'm creating like content and sharing stuff that's useful and related to the professional real estate investor. But the best way is to really hit me up through Instagram.
Awesome. And that's Real Property Investing, right?
Right. Exactly.
Awesome. This has been a very interesting conversation. I've enjoyed it thoroughly. I mean, you sound like you're doing pretty good. You got a cool project going on. You're living in a place that you like to live. What else do you like to do for fun when you're not putting deals like this together?
Right. Well, as is typical in Spain, I enjoy playing soccer. Well, I used to until I get injured recently, but I play a lot of sports. I love to spend time with my kids. My kid, sorry. Um, I, um, I like to study. I'm studying law part time, and something I've been doing for a few years. I still have a couple years left, and I like to basically spend time with my friends and family. But I'm really big into sports.
Very cool, man. This has been a pleasure. I really appreciate you coming on the show with me. I think, I know I enjoyed it. I hope our listeners enjoyed it. And if you want to learn more about Juan Carlos, definitely hit him up on Instagram at Real Property Investing. Juan, this has been a pleasure. Thanks a lot for joining me on the show. I hope you and your family are staying safe in this challenging time. I wish the best for you guys on your project. And I also want to thank everybody out there for listening and joining me today on the InvestNest Real Estate Investing Show. Be sure to hit the subscribe button if you're listening to the podcast, and check us out online as well on Facebook, Instagram, and Twitter at the InvestNest. And of course, check out theinvestnest.com if you haven't already. It's an online social community for real estate investors to network and learn. And thanks for joining me and listening this week, everybody. I'm your host, Travis Murphy, and you're listening to the InvestNest Real Estate Investing Show. Juan, thanks again.
Thanks, Travis.
Thank you for joining us on the InvestNest Real Estate Investing Show. Be sure to join the InvestNest.com and start learning and earning today.